The opportunity to build real wealth has never been more accessible than it is right now. And on this channel, we are going to show you exactly how. Welcome to the long position. Let's get to work. Today we are covering 7 dividend ETFs that pay you every single month. Not quarterly, not twice a year, every single month. Like a paycheck from your portfolio. Let's get into it. First, what is a dividend? When a company makes a profit, it can either reinvest that money back into the business or share some of it with its investors. Those payments to investors are called dividends. As an ETF investor, you collect dividends from every company inside the fund, automatically, with no effort required on your part. Now, most dividend ETFs pay quarterly, 4 times a year, but the 7 funds I am about to share with you pay monthly. That means every 30 days, money lands in your account just for owning these funds. Let's get into them. Number 1, JEPI. The JP Morgan Equity Premium Income ETF. JEPI is one of the most popular monthly dividend ETFs in the world right now, and for good reason. It combines stock market exposure with an option strategy that generates additional income. The result is a dividend yield that typically sits between 6 and 8% annually, paid monthly. On a $10,000 investment, that is roughly $50 to $65 landing in your account every single month. Number 2, JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF. JEPQ is the younger sibling of JEPI, but focused on Nasdaq technology stocks. If you want exposure to companies like Apple, Microsoft, and Nvidia while still collecting a monthly dividend, JEPQ delivers both. The yield typically runs between 9 and 11% annually, one of the highest on this list. Number 3, SCHD, the Schwab U.S. Dividend Equity ETF. SCHD is widely considered one of the best dividend ETFs ever created. It focuses on high-quality U.S. companies with strong track records of paying and growing their dividends over time. The yield is lower at around 3 to 4%, but SCHD also grows in value over time, giving you both income and appreciation. This is the one most long-term investors hold as a core position. Number 4, VYM, the Vanguard High Dividend Yield ETF. From Vanguard, the same company behind VOO that we talked about in video 1. VYM holds over 400 U.S. companies that pay above average dividends. The yield sits around 3%, and the expense ratio is just 0.06%. Incredibly cheap, incredibly diversified, incredibly reliable. Number 5, RYLD, the Global X Russell 2000 Covered Call ETF. RYLD uses a covered call strategy on smaller U.S. companies to generate a very high monthly income. The yield typically runs between 10 and 12% annually. The trade-off is that RYLD does not grow as much in value as other ETFs. It is designed primarily for income rather than growth. Best suited for investors who want maximum monthly cash flow right now. Number 6, AGNC, the AGNC Investment Corporation. AGNC is a mortgage REIT, a real estate investment trust that invests in mortgage-backed securities. It is required by law to pay out at least 90% of its taxable income as dividends, which results in a yield that often exceeds 12% annually. High yield comes with higher risk, so this one should be a smaller position in your overall portfolio rather than a core holding. Number 7. Realty Income Corporation, known as the monthly dividend company. That is literally their tagline. Realty Income has paid a dividend every single month for over 50 years. It owns over 13,000 properties across the U.S. and Europe leased to tenants like Walgreens, Dollar General, and FedEx. The yield sits around 5%, and the dividend has grown consistently year after year. This is one of the most reliable monthly income investments available to any investor. Now let us look at what this actually means in real money. Split $10,000 equally across all 7 funds at a blended yield of around 7%. That is roughly $58 landing in your account every single month. At $50,000 invested, around $292 per month. At $100,000 invested, over $580 per month. That is the power of dividend investing at scale. Start a side hustle, invest the income consistently, and let compound interest do the rest. Every dividend you receive can be automatically reinvested to buy more shares, which generates more dividends, which buy more shares. Most brokerages set this up with one click. Turn it on and forget about it. Next week, how I would make $500 a month online starting from zero. You do not want to miss that. Hit subscribe for new videos every week on investing, side hustles, and building real long-term wealth. I will see you in the next one.